Crossing the bridge. How can institutional investors get access to DeFi?
I believe that this topic, in terms of insights and in terms of valuable information that you will get, will definitely be one of the most interesting and one of the most important at our third chapter at AGS SiGMA stage. So, because if we think about it, institutional investors are more accustomed to CeFi. Right now, they are looking more and more into DeFi, decentralized finance, and to discuss it, how they can actually get easier access to it. So for them, and how in that case, they can maybe navigate it in that more. A lot of interesting insights you will get today from Jane Thomason, Chair of Board at Cathay Holdings. Please give her a big hand. She will be our moderator for today. Also, please welcome on stage Kristijan Glibo, founder and CEO at Beyondi. Be louder, please. Put your hands together today as well for Kevin Soltani, blockchain technologist and investor at Gima Group. Give him a big hand. Maybe he will join us shortly, because there are lots of interesting exhibition desks. So sometimes some of the speakers might be lost just a bit. Then please welcome on stage Joseph Aliagas, managing partner at DIS Capital. He probably also will join us really shortly. Also, please give it up to Oscar Andrade, founder at Bancabios DeFi. Give him a big hand. And also, last but not least, please give it up to Ahmed Ismail, CEO at Fluid. Hello. Give him a big hand. Thank you, everyone. Yes, please. We were already inviting the speakers, but you probably got lost. Sorry. We have additional speaker, Jarek, if I'm not mistaken, from, once again, Revenue Capital. Please give him a big hand. Thank you.
Thank you very much, and welcome to the panel. We have got another speaker who wandered off and lost concentration. So welcome everyone to the panel. My name's Jane Thomason. I'm the chair of a listed investment company in London called Cathay Holdings that invests in DeFi and blockchain. Let's have a quick intro with the panel members.
My name is Kristijan Glibo, and my background is blockchain development, but in the last few years we work closely on setting up the regulated and technical and business framework for crypto funds and investment. So I do mostly advisory for the blockchain projects in a very comprehensive way with technology and business modeling.
Thank you. Jarek.
Hi, apparently the last minute addition to the panel. My name is Jarek Bialek. I'm the CEO of Revenue Capital. What we do there, we provide funding and tokenization services to companies, both already operating on-chain and those not on-chain yet.
Okay, here's our missing panel member. Please introduce yourself.
Welcome, everybody. Am I? Yeah, all right, sorry. I just came from the other stage to support a friend. My name is Kevin Soltani from Gima Group. Apologies for the late arrival. Gima Group is an alternative investment company, mainly focusing on, obviously, blockchain development, but gaming, esports as a traditional path to the investment. But now, over the last 3 years, combining, obviously, blockchain and crypto with gaming, play-to-earn, GameFi companies has been a big part of our portfolio. And I was the CEO to the second listed company on the London Stock Exchange, which ended up being the first to implement crypto gaming within the UK as well. So thanks for being here.
Oscar.
Hey everyone. Hi everyone. Yes, my name is Oscar. I'm the founder of Bancabios DeFi. It's the first ESG-driven DeFi ecosystem. We aim to be ESG-driven for institutions. Thank you.
Ahmed.
Hi, I'm Ahmed. I'm the CEO and president of Fluid, which is an AI-based liquidity aggregator for DeFi. I've also been an investment banker on Wall Street for 15 years at Bank of America, at Jefferies and Credit Suisse. And I'm also the co-founder and board member of Haven, which is the first fully regulated OTC platform in Abu Dhabi. Thank you very much.
Thanks very much. What an amazing panel we've got here. So let's just start with talking about how institutional investors can actually get involved in DeFi. Do they have to get a wallet, or what are the options there for them? Let's start with you.
Okay, so yeah, they do not need to have a wallet, of course, like every professional and institutional investor, but what the fund, for example, need to have is complete technical infrastructure to provide them that kind of functionality and features. It needs to be regulated, definitely, and it needs to be dynamically driven in a manner of changing the stuff and to be compliant all the time. So I would say it's good to have technical background, but it's not something what you will need if you're a professional or institutional investor.
Yeah, thanks. And regulation and compliance are not well-known words that go with DeFi, so we'll be interested in what the panel's got to say. Jarek.
Can you say again the question, sorry, because I missed that.
How can institutional investors invest in DeFi?
Right. So there are two strategies. Probably the one which is commonly used is just to become the passive investor. And what I mean by the passive investor is simply acquiring tokens, hoping that they will eventually flip at some moment of time and gain returns after liquidating them. That's easy. That's something we all probably know. The less complex way, which is slowly becoming mainstream as well, is to plug yourself into the token economics, which is developed, introduced on the DeFi institution side. So just an example of that can be creating a tokenized asset through which you derive revenues to your LPs. A silly example of my own company, we are tokenizing revenues of the companies from our portfolio. So this way, those revenues which are tokenized get access to the exit options to our LPs on one hand. So the investment is liquid. At the other hand, it is something which is like directly embedded in the operations of our portfolio companies. So that's, like I say, it's a little bit more active role, which requires the infrastructure mentioned here, which requires some knowledge, technical expertise on the institutional investor side, obviously, but that also is something which is guaranteeing a longer-term relationship and the longer-term returns from this relationship.
Okay, terrific. And what about GameFi?
Yep, you called it. So I'm going to take a little different approach. Obviously, I come from the gaming industry more recently, so GameFi obviously is a buzzword, but it's quite a buzzword. So you got decentralized finance with gaming, simple as that. I do believe it'll be the largest, it'll be the biggest help to the adoption rate of people getting onto traditional DeFi, because you have 16-year-olds, 15-year-olds that are going to be able to learn to stake tokens within a game ecosystem, and that game ecosystem will repay them the token fee or whatever, and then it'll just be a closed loop. This is happening in games like Fortnite. This has been happening in games that AAA game companies have been doing for 20 years now. They just don't call it crypto token or a DeFi staking mechanism. So you have this culmination of all of these within gaming companies that I predict the future League of Legends, Call of Duties will even start to implement things like that. All of those games that I just mentioned, whether they're play to earn or traditional AAA, already have some type of in-game ecosystem. Again, they just don't call it token or crypto or staking DeFi. So I believe the biggest possibilities for institutional players is to invest at the traditional level into those companies, or to get into GameFi in any sense of the word. And also, obviously, you got games like DeFi Kingdoms, which aren't so much a game. At any given time, they have about 600 to 700 in TVL, 600 million in TVL. And those aren't small numbers for just a game that's on a DeFi connected network. So I think we're going to see a lot more out of GameFi and institutions.
And Oscar, you're going to talk about ESG, so there's a lot of institutional interest in that, obviously. Tell us about what you think.
Yeah, so institutions institutions like ESG driven, but also let's remember what is DeFi, right? DeFi is non-custodial trading ecosystem, non-custodial trading networks. So just by saying no custodial, there's a little conflict, right? Because by institutions, by default, they need a certified custodial that everybody recognize in their trading ecosystem to say like, okay, this is gonna be the custodian. Everybody trusts the custodian, so by DeFi is non-custodial trading. So only there start the challenge of how we're gonna onboard institutions into a non-custodial financial environment. So that's the challenge, but also there's other ways institutions are joining DeFi. JP Morgan owns biggest stake of MetaMask and Infura, right? So Infura is actually collecting the private keys on MetaMask. MetaMask, I don't believe, is a decentralized. It's pretty much centralized. Someone is storing these private keys. It's not actually, the private keys are not stored in the blockchain, fully decentralized way. It's already like a centralized. Of course, in a market that grows from 20 billion to 200 million to 2 billion to 200 billion, that is DeFi right now. Of course, institutions are like, they want a piece of this, right? How they're gonna access this? Institutions, they have debt, they have bonds, they have mezzanine finance, they have real estate investment trust, they have loans, they have a lot of financial instruments that they can mint and they can tokenize and they can create their own DeFi, right, between banks. So it's very interesting, yeah, in the way that our project is doing. Also, they is ESG driven, right? So, but yeah, that's pretty much like the DeFi challenge that I see. That DeFi needs to stay non-custodial, and this is the main challenge I see.
Thanks. We're going to come to the challenges. So, Ahmed, what about you? How can institutional investors get involved?
So let me start by saying that DeFi promises to completely disrupt the financial sector as we know it and the banking sector as we know it. You'll be able to lend, borrow, trade assets, buy insurance without the need of going through a bank. So without the need of expensive office space, fat banker salaries, etc. And you should be very worried if you're a banker right now with what DeFi is bringing to the table. There are challenges. I mean, DeFi is still in its infancy. In 2019, there was, I think, $700 million of TVL, and now we're at $200 billion. So it's a huge industry, and it just is set to grow even further. I'd say the two main challenges that DeFi has at the moment is, number one, regulation. DAOs, which are the autonomous organizations that govern DeFi projects, are community focused by nature, and they're very, very hard to regulate. So to use a maritime example, you can't police the seas, but you can protect the harbors, and you can protect the ports and the shipping lanes. And that's what regulation is trying to do right now. So regulation for DeFi is coming. You know, the SEC is going to be playing a very big part in this. I'd say the second problem in DeFi is liquidity. And DeFi projects are so new, liquidity is super fragmented amongst all the DEXs. And there is a need, and this is why I'm here, to unify that liquidity and create an aggregator that is able to solve that problem for DeFi, i.e. create best execution, low latency, etc. And this is what's going to really pump the DeFi sector and enable institutional adoption to actually occur.
Thanks very much. And so we've got liquidity, and then we've got regulation as two of the key challenges. So, Oscar, let's come back to you with some challenges that you see in bringing institutional investors into this space. Yeah?
Oh, yeah. I mean, there's
already like platforms that are working for that. There's Aave Arc, Camouflage, and there's also the CDeFi Alliance, which, and by the way, for example, Binance is an institution right now, and they have CDeFi, so it's centralized DeFi. They are actually storing, or they are the validators of all the transactions that are happening in their DeFi, in all the Binance chains. It's like centralized, right? So how they need, there's different ways, but there's no like a complying full framework, which is complete. They have like complete umbrella of regulatory components, and that it doesn't exist. They can have exposure to DeFi coins, like all the DeFi tokens out there, like there's many. So they can have this exposure. They have already like institutions like Grayscale or CoinShare that are giving the options to have access to these instruments, new DeFi investments, but that's only like holding DeFi coins. But in the more interesting way is like tokenize all the debt, tokenize the bonds, tokenize mutual funds, right? Tokenize all these like $1 trillion on capital markets, wealth management. That's how we're gonna transplant from this environment who works like from 9 to 5 in certain time zone to 24 hours trading environment. So.
Thanks very much. How about in gaming? How are we going to get the institutional investors in? What are the challenges?
For this one, I'll excuse me, I'll go away from just gaming a little bit, because on the banking side, we know it's something that's coming, right? And it's going to be, I guess, a massive opportunity, but at the detriment of the banks that aren't, there already. But if you're looking at what kind of the token, we have like Tesla tokens, right? We have the skin shares of these. That's going to take market share away from the stock market. This is just inevitable. Now, if it allows it, see, in America, we don't allow these things, regulations. DeFi is right up that alley. There's a lot of regulations around it that it's going to take. We're going to be the last ones to adopt it, but we also have the largest infrastructures. So Chase Bank and Wells Fargo jumping on it and giving that to their users is going to be, it's just a game changer. But I see it as the red line in the sand where they can't go back. So they don't. It's not that they don't want to. It's just like the BlackRocks and the Grayscales, slowly jumping in. It'll be like that with the banks and DeFi. So I think their challenge is at least for my country, is regulations and access. Access, because we don't have too many tools. It seems like that, but you can't look at Beefy Finance or some of these other swap aggregators showing you a ton of swaps. Those aren't so sophisticated. We need a couple more sophisticated products so that at the banking level they can adopt it. And when the Americas come around, it'll just be, it'll catch on like wildfire, because I believe their users will obviously want to adopt that much better than their 0.001% savings account.
You look like you're itching to say something. Do you want to go next?
Yes, because he actually touched the main point. Let's move out from tokens for a moment, because if you are an institutional investor who said you need a token for your institution, maybe you just want to invest. For that, you need tools, you need regulated infrastructure, you need to understand how dynamic regulation can be. Because, for example, Switzerland opened the draft for regulation of DeFi. It's going to be like this for this month. Maybe in the next month, it's going to be completely different, because they will learn some new stuff. So how you are going to challenge that dynamic governance of your institution? That's another part. The biggest challenge for institutional investor at the moment, and what we have in our roadmap, was to bridge the gap between institution and also between the governments and regulators. Because at the end of the day, what they need is reports. They need to be sure that those reports are actually controlled, not tampered, and everything is in compliance with the numbers coming from the blockchain side. They also need to be aware how your custodian infrastructure works. Yes, DeFi is non-custodial, but if you put a DAO on the crypto fund, you can get a bit more non-custodial solution, where your custodian Like we in Croatia have a custodian who is a government bank. They're only holding a part of the key to sign the transaction when we initiate the investment. That's how you can be more, let's say, decentralized in a manner of organization of operations. So definitely, we need tools, we need certification in the projects, we need vetted reports, and we need simplicity. We do not need to talk about DeFi as a new age. We just need to bring it as a normal financial instrument because it's gonna be in the future.
Yeah, thank you. I think that regulation and compliance is definitely going to come, and we can't keep it being as opaque as it is. But the tokenization of everything, Jarek, I want you to have your turn.
It's all right. You
Talking
still,
of
you still
the
have
challenges,
to repeat it
the
as
challenges.
it's the echo. I cannot hear it.
Yeah, I know it's hard. Can the audience hear? Okay, that's good. We just can't hear each other. So, Jared, let's hear from you about some of the challenges.
Right. So a lot has been said about the regulations. I'm actually not going to echo what's been said so far, but I just want to point out one interesting thing. Regardless of the challenges, those challenges being addressed by the certain jurisdictions also create the play field for the jurisdictions themselves competing for the best possible regulation. So the one, I'm actually not a lawyer, so from the uneducated perspective, I can say Malta and the introduction of the digital person concept, which is interesting from the perspective of the decentralized organizations as well. That's the trend, how smaller jurisdictions try to compete with those well-established ones, providing much more robust environments to eventually, be visible. So now, speaking about the challenges, obviously it's the mass adoption. The mass adoption and perhaps also the awareness built among the mainstream players, as the solutions or the trends we're seeing right now is eventually creating sub-funds by those institutional players, institutional funds, to kind of compensate the lack of the regulations which could be put in place when it comes to their cooperation. So I don't want to steal the time from the others, but that's my view on the point.
Thank you. So we've got regulation, compliance, liquidity, tools, and we've got less than a minute each left, but I want you to take that minute and give the audience your takeaways from this panel. What do you want them to remember about how we're going to bring institutional investors into DeFi?
Okay, the first thing is that we are entering a core adoption phase of DeFi right now. It's a $200 billion industry, and it's going to grow and grow and grow. For institutions to really get in, regulation has to come, and it is coming. Secondly, liquidity. Liquidity is not there yet for DeFi, and as liquidity aggregators such as Fluid come about, that will help solve this $2.5 trillion problem, and we're very excited about the future.
Oscar.
Yeah, so I think the challenge is going to be or institutions like powerhouses, right? They need to set up like a blockchain engineer inside their companies if they actually really want to join DeFi as non-custodial DeFi, right? If they have like a blockchain engineer inside all these companies, then they can start to create their own ecosystem. We want to facilitate that for them, right? We want to facilitate like how they can do this. But I think that's pretty much the challenge. If not, they just can pretend they joined DeFi, but that's actually it will be very centralized, you know?
Okay, thank you.
Yeah, I'll go back to gaming, and if there's any players out there building a game, they're not cheap, they're highly technical, but you should be thinking of staking mechanisms, you should be thinking of GameFi, which is DeFi in gaming. It's simple as that. The closed loop that you'll create, and my co-founder Nolan Bushnell of Atari, the original Atari, will say the reason why he created Chuck E. Cheese was because he knew that if he could get the mom to put $20 in and get 20 tokens, the kid might not spend those 20 tokens. Well, that's the same thing in a closed loop token system for a game. Those tokens sometimes never leave, but they're gaining access to bigger and better NFTs or levels or whatever. So if you're a game developer, if you're a game investor, you should definitely be thinking about putting GameFi or some aspects of it in it.
Thank you, Jared.
Yeah, long story short, getting back to the awareness building and getting back to bringing the industry mainstream, it is all also about the community building around the concept. So in the lack of business models, just getting back to the 1990s, beginning of 2000, you know, when we think about Google, when we think about Twitter, essentially those companies are still around because of those communities effectively being around those businesses. I believe that same comes with the DeFi these days. So I'm not necessarily undermining the necessity of like sound business models behind essentially the invested assets, but this is something very important also from the investor perspective to look at this community building aspect in the invested
Okay,
companies.
last comment. I think the chair's coming up to stop us.
I'll be short. Change the game, change the mindset. The industry will solve all the challenges, but the institutions need to think of another and different business models and bring those who bake them to the industry itself to become proactive investors rather than just sitting and waiting. That's it.
Thank you very much, and I'd like to thank everyone on the panel. We've got a long way to go, but I think they've enriched your thoughts about how to bring institutional investors in. Thank you, everyone.
Thank you so much. Please give a big hand to our amazing panelists. I believe that you definitely have more questions to them, so please reach out to them after they come out from the stage.